I read Chinese sort of retaliation for the Trump's 10% tariff hike on the Chinese goods. I think the Chinese retaliation is pretty measured, and it's more on the symbolic side than actual. Number one. Number two, I think the leverage for the U.S. over China is very small right now, because if you look at the data, the mutual dependence, mutual economic dependence between these two countries are have come down quite dramatically. To just give you some example, let's say the Chinese export to the United States as a share of the Chinese GDP has come down about 2.5%. It used to be 4 or 5%. Now it's about a little bit less than 2.5%. And same thing if you look at the Chinese import as a share of the U.S. GDP, right now it's about 1.5%. So there's not a lot of left for sort of economic leverage. That's why I think anything that if you do a dramatic tariff hike, let's say 60%, the damage could be pretty big, but on both sides too. So I don't think that Trump is going to do that. And the final thing here is this DeepSeek. I think that is a very important development that is going to have a major boost to the Chinese tech companies. The reason for that is, of course, there is a cost aspect, but also it is open source AI. And I think it's going to accelerate the application across the world, not only within China, but also across the world. I think this is really similar to the second half of the 90s when internet become rapidly available to lots of businesses and consumers. I think this is a watershed event that's going to accelerate that trend.
I see.
For that,
so
I think most likely yes.
Yeah, I hear you.
Go
so
ahead.
there are a number of reasons to be optimistic and resilient about the outlook for China's macro and markets. So why then, Chen Zhao, do you feel Beijing needs to tinker with the currency? You believe that China needs to bring down the exchange rate substantially?
Absolutely. Absolutely. The reason for that is, I'm just giving you some reasons why the market could open higher. But don't forget, this is in the context of a very widespread price deflation. So if you look at Japan's experience, the most effective way to get rid of deflation is to devalue your currencies. Think about the Japanese yen from 2013 all the way to today. The massive devaluation of the Japanese yen really helped the Japanese to reflate its own economy. I think for that purpose, China, needs additional stimulus because of GDP growth of 5% is still below potential in my view. Otherwise, you don't have deflation. B, they do need to get the currency a lot cheaper than it is. If you think about last year, where the Chinese economy was very difficult, and the Chinese currency actually was the second strongest currency after the dollar. It doesn't make any sense. It's kind of a stupid policy in my view. So I think this year they need to get the currency down in order to deal with the deflation, in order to deal with the additional 10% tariff, and in order to get the economy going. That's my view.